Welcome back, folks. This is Greg Silberman. I am a long-time institutional chief investment officer. I feel like I've been institutionalized. Anyway, welcome to our sessions of Come Learn With Me. This is where we pick some good, interesting articles that have percolated up in our social media platforms, and we do a Learn With Me session where we read the article together. This one is based on crypto, I believe, which has been quite popular. We haven't seen much of a dent in crypto since the correction, but the markets are changing. So let's see what this one's about. Okay. Andreessen Horowitz raises $9 billion in new capital for venture growth biofunds. Oh, okay. This morning, private market powerhouse Andreessen Horowitz announced that it had closed $9 billion in new capital for its venture capital growth stage and biotech-focused vehicles. And this article is from January 7th, so about a month ago. The firm, better known as by the moniker A16Z, also raised a $2.2 billion crypto-focused fund last year. These fundraisers by the firm highlight the rising size of private market investing vehicles that we tend to group under the venture capital banner and the burgeoning capital base of a 16Z itself. Looking back in time, the group's last generation of funds, including its seventh venture fund worth $1.3 billion, its second growth fund worth $3.2 billion, and its third bio-focused fund worth $750 million, were worth just a touch over half of its last aggregate fundraise. There we go. So it appears that a 16Z is not only reloading, it's raising more capital than ever for its usual crop of focuses. That the group is raising larger investment capital pools should not surprise. Its first crypto fund was worth $300 million, its second $515 million, and its most recent around 4 times that much. As an investing collective, a 16Z, like many private market investors, is putting more capital to work per new crop of new funds. That's the evolution. The better you do, the bigger your funds. The trend of larger funds is generally thought to be contributing factor to larger startup funding rounds, and some of the pressure regarding deal access harder and startup valuations higher. That may all have changed over the last month, or changing. To underscore just how big venture and venture-ish funds are today, recall that Norwest Venture Partners closed a $3 billion fund last month. That pushed the group's total capital it has raised across the decades, as our own Connie Loizos put it, to $12.5 billion. So a huge fraction of the firm's historical capital was raised just last quarter. That's tangentially interesting. It's a capital arms race to the private markets as enthusiasm for technology companies, both traditional and frontier, crypto, quantum, computer, metaverse, etc., remains red hot. That the public markets are taking a significantly different tack in recent weeks doesn't appear to have slowed the venture capital firm side of fundraising coin, not yet at least. Okay, most important part of this article is this section here. Private markets, yes, indeed, they follow public markets. It just takes a bit of time, so don't get lured in. There will be a better buying opportunity for cryptos, I think, in the future. Anyway, hope you enjoyed that article, guys. If you want to learn about our mini investment themes, I think you'll like them. We got crypto, we got cannabis, we got battery metals, we got all the interesting stuff. Take a look at our links below. And come join us again for another Come Learn With Me session. This is Greg Silberman out for now.